Dr. Wald, I would ask how your weekend was, but I saw a tweet from you yesterday bemoaning your beloved New York Giants and how they celebrated a championship team from 2011. They honored them by scoring 11 points, though. So there's that.
11 points. Yeah. Yeah. It's
Luckily, my
it's
Saints
it's
couldn't
like
play.
it's like pathetic. It's so pathetic. I'm moving on to basketball season. I've
Yes.
decided. I'm moving on. I've been watching the Celtics preseason a bit. I'm excited. I have tickets to a game actually
Oh, a game. Where?
in Orlando.
Orlando. Okay. Okay.
Yeah.
Yeah,
So
would Atlanta be closer to where you're at?
no,
No, really?
no. Orlando is like an hour and a bit, maybe 2 hours
Really?
tops.
Okay. My
Oh
Florida geography
yeah,
is not that great, so.
Atlanta is like 4 hours. It's also an absolutely miserable drive to Atlanta. Atlanta is people don't realize this. Atlanta is actually really far west. Like it's right. I
Mm-mm.
lived there for
Oh, yeah.
like just under a year, and it's like
Mhm.
almost it's like really far west in the time zone, in the
It's
Eastern time
closer
zone.
to yeah,
So
close to Alabama. So it's due
yeah,
north of
who knew?
Tallahassee, which is, yeah, almost close to Alabama line. Wow, okay. I'm looking now. I didn't realize how close
Yeah,
you were to Orlando. Okay, well, the
yeah,
Celtics and Magic. Okay. Do you like hockey? I
yeah.
don't know if we were talking about this. Were you a hockey fan?
I did like hockey when I was younger. I was a big Flyers fan, and
Mm,
I've been known to when I was in Boston. I was known to watch the Bruins. I did go to the Bruins Stanley Cup parade more for the spectacle than as an actual Bruins fan. I'd say hockey is probably not my not up there. More
okay.
basketball and football.
Well, you have
Baseball,
that
I
kind
could
of
like
stuff, so.
kind of watch.
Yeah, well, baseball, the Red Sox are hopefully can pull it off, but we shall see. Okay.
What I like about postseason baseball is that there's one year the Phillies and the Yankees were playing each other,
Mhm,
and it was based, which meant like not no, they weren't playing each other. They were both in the running. They were both in like the division finals or whatever it was.
mhm.
And so we watched an obscene amount of baseball, and there's like this period between like around the sixth inning that's like really the perfect time to take a nice nap. So I would
I think,
like take a bit of a nap, get up, see the end of the
uh
game. Worked
oh, they
out
lost
well.
to the Rays that year after the World Series. No, 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 they beat the Rays. Let's see
I
here.
think the Phillies didn't make it. The Yankees did.
Yes, I'm trying to think here.
I think they won.
They got the guy from, oh gosh, he died in the plane crash. I can't remember his name now. Um, anyways, Roy Halladay, and that's probably the year
Oh,
you're thinking of, and they lost.
I'm
Anyway,
thinking of like 2009,
yeah,
2010, maybe.
that's about right. That's about right. I got Halladay. Okay. All right. Speaking of craziness, let's talk about oil prices. Crazy bets on oil to, let's see here, say that again. Crazy bets on $200 oil invade the options market. Okay, $200 oil, Dr. Wald. Okay, we've heard a lot of crazy predictions on this podcast before. And just to be clear, so right now we're sitting at, was it 80? I hadn't checked it in a few hours. So
Yeah, what
Brent's
are we?
84, WTI is just shy of 82.
Okay.
So that's a $120 call it increase, right?
Yeah, I mean, mm, no, we're
No,
not getting 200. Come on.
in 200.
I mean, like, maybe if we have like massive inflation, which
I'm,
we
I'm
are having, but
yes.
I
Well,
mean like hyperinflation.
it only affects the elite, though, the top level of economies, but whatever. Um, I am waiting for the articles that start comparing the current oil price to historic oil price relative inflation. So I don't know if those may be out there, but I'm looking forward to those because I always get so lost in those. I'm like, yeah, I think I get what you're saying, but I'm a dummy. Just what's the price now? I can handle that. $200 oil is a lot. So Platts had a thing that came out this weekend that said that the Balkan is anticipating an uptick in rig count next year. Okay, so the Balkan's going to get an uptick. If that's true, then the Permian for sure will get an uptick. The $80 was kind of the magical number that put them over. And so if that's the case, then you will start to see the price will just presumably level off. At the same time, if OPEC's read that headline, then they've got to be thinking about that as well, right? They've got to be thinking, okay, how do we handle? So, yeah, I think 200. It seems hard to get there.
Yeah, I can't see us getting to 200. And in fact, this article doesn't even like have any. It doesn't explain where this $200 call comes from anyway. Says that um it says traders are betting that the U.S. oil benchmark will surge above $100 a barrel. I'm not even sure I see that. I mean, I can see like maybe making some bets, but I just don't. It's sitting at like 82 right now, basically.
Okay. And so I'm not a all options trader, but if it works anything like the gambling markets do, and it might not, but in the gambling markets, you could go take out a bet on the Giants to win the Super Bowl right now, and you could get tremendous odds. So you
Yeah.
could put down $100, and if the Giants win the Super Bowl, you might win, 10,000 or something like that, whatever it is. So is it something like that to where they're taking out this play to where if it does hit, they're not putting a lot of money on there, but if it does hit, then they've really cashed home, and they don't lose anything because it's negligible dollars.
Yeah, that's what I'm thinking. It has to do more with that. It does say, um, I mean, they're talking about it in like gambling terms. Like it says,
Mhm, mhm,
wagers across the
mhm,
Atlantic are even more aggressive. Some traders are betting Brent crude will hit a record high of $200 a barrel by December 2022.
mhm,
That's like over a year.
mhm.
Would you ever bet on what you think the price of oil will be in over a year from now? I want like I really wish someone would have could have gotten Ollie on the email on the phone and been like what do you think about it? Because he always talked about how like if he knew what the price of oil was, he'd go to Vegas and bet on it, but he doesn't. And if he didn't these people, they're basically betting on it like Vegas. That's what I think it is. It says options give investors a right to buy or sell at a stated price by a certain date. And they
Mhm.
typically use options to make directional bets or hedge their portfolio. So I think what this is saying is they don't necessarily believe it's going to go up to $200 a barrel. They just are, that's the bet that they're playing because they think it's going to go up.
Yeah.
And so they're just using it to like I don't think it actually means that they think it will be $200. It's not like they're going on CNBC and like making that call,
And that's always a great
which
quote.
I would have put it past them because lots of dumb people do that.
Well, it's also a great quote to be reminded of, that if people actually knew where the price of oil was heading, they wouldn't be selling you the information. They would be cashing huge checks, and you would never hear from them again because they
Yeah.
would own islands and jets, and they'd be hanging out with Bezos going to space if they could actually predict the price of oil with any degree of certainty.
Yeah.
So
Speaking of which, what do you think about Captain Kirk going to space?
oh, I saw that. I saw that, and I'm curious. That seemed like a shrewd move from Bezos because he took a lot of flack from going to space the first time. But
Yeah.
then bringing Captain Kirk, and everyone's like, "Oh, look at this,
Yeah.
Kirk."
I think they missed the mark. I think that they really missed out on some like marketing opportunities there.
Some cheesy slogans.
Oh yeah, and some like, old-timey Star Trek merchandise with the new blue whatever it is
Mhm,
that,
mhm.
like, come on, people would totally have bought, like, commemorative mugs
Yeah,
and T-shirts and all that.
yeah.
Yeah.
And then who was he? The spokesperson for like Priceline or Travel something. Probably could squeeze a few commercials out of that as well. Book a trip to space or some joke.
Yeah.
So,
Boldly
Captain.
go where Captain Kirk has gone before, something like that. Come on, I like anyway,
No, no, you're right. They missed their window. So,
yeah.
okay, energy crisis prompts Asia to turn to USA for oil. I don't think we have it. Let's see here in these articles today. Um, but there was a report from Reuters as well stating that the Biden administration has also reached out to U.S. shale producers asking for their help. Um,
Oh, finally. Everyone was like, "Why aren't they doing that?" What do you
well,
think the shale producers said? Like, okay, if you were a CEO of a shale oil company, say you're not Scott Sheffield, not Oxy, but not a. It's not like you have three wells, okay? Because there are those companies that have like three employees and like you know what would you say to the like what I don't know. This is your opportunity. What would you say to the Biden administration?
oh, I'd probably lay into him pretty hard. I mean, you gotta think if it's your opportunity to say something, they're not actually gonna listen to what you say, so you turn it into a press event, right? So I would get all over him at the federal drilling, the pipelines, taxes, methane emissions. I would
And be
just
like, "You want our help? Well, what
right,
have you got what are you gonna do for us?
right. I would be disrespectful.
Where's our" and then I'd make my big I'd pick, like, 1 or 2, and I'd
Yeah,
make that my big request, and if it looked like they had no idea what I was talking about, then I'd just go in on all in on everything.
yeah. I'd be respectful, obviously, but I think you'd have to whatever you're hearing. So if what we're hearing is true is that the investors don't want to invest um, because it looks bad, then I would encourage the president to triple down the messaging behind the importance of oil and gas, something like that. Because whatever you think about the investors, if the U.S. government does start vocalizing their support for it, and it's a Democrat, then I think that would help.
So then say you're the Biden administration and you're like at least a little bit savvy, but you're just like not that savvy. Do you fire back with, well, if you don't help us, we're going to push for, or not like a threat like that, because you can't do that
Mhm.
because then they'll just go public and it'll be like Biden threatens the U.S. oil and gas industry. But you say something like, well, one of the other options that we are considering to alleviate high oil and gas prices in the United States is restricting restricting crude oil exports,
Mm.
or potentially then what do you do other than call them an idiot, because that would just screw up the global supply chain even more than it's screwed up, but
Yeah, I mean, the whole thing's silly, right? I mean, that's the problem is that you're sitting here, um, the fact that the Biden administration could prevent a company from exporting their product is ludicrous, and that's not a Biden administration shot. That's where Trump, Biden, Obama, Bush, Clinton, Bush, Ray. I mean, like insert president here. I don't really
yeah.
care. Like the fact that they have that power is ludicrous, and so, but it's the way it seems to work. So,
Yeah, it's interesting. I mean, this article is kind of interesting because it seems like the what's prompting Asia to turn to buy more potentially from America. I mean, it says that they're buying super tankers of American sour crudes, which
mhm,
I don't believe we export a huge amount of sour crude
yeah, I don't think so.
for delivery in November, and they're seeking more for December. Most buyers are seeking U.S. grades that had slumped to the lowest levels of the year. So I wonder if they're actually I wonder if they're also looking for Canadian oil as well. That would be interesting. But it just seems like mostly they're doing it because WTI is trading and it's still at a discount
Mm,
compared
yeah,
to Brent. So it's purely based on cost, it seems. My question is, are they being offered basically like transportation discounts, because they're gonna have to pay so much for transportation to get it from America, as if they were getting it from, you know, the Middle East, it'd be a lot quicker.
yeah, right.
Um, so I just wonder, like, how much of a deal are they getting in the end, or are the producers basically like paying for it? Um,
Well, let's say that the U.S. producers kind of go to our next article from um, Energy Intelligence, making back-to-back appearances on the podcast. Look at these folks. Uh,
yeah, I know. I like
will
Energy Intel.
yeah,
The
will
problem is most of their articles are paywalled,
right, they're
but
both
I mean,
paywall, right? We've found a way around, or they're opening up, whatever.
yeah.
It talks about $80 oil. Will it open the spigots? And there's been some reports that it will. The question I think you gotta have a couple things, right? So the show producers at some point they've got to drill wells to capitalize on this income that's out there for this potential income that's out there for them. So you have that. But going back to my comment about the Saudis, the OPEC meeting monthly, you know, what do you think is going to happen if we start to see a pretty steady uptick in the U.S. Rig count? And I'm not talking like a rig here. I'm talking like 10 rigs a week or 7 rigs a week or something where over the course of the month we've added 30 to 40 rigs for 2 or 3 months. Will the monthly meetings push OPEC or increase their chances of cutting production, or what make the resolve even more because they're like, hey guys, You know what we're doing on a monthly basis, and you're still not responding to us.
Yeah, I think that's a good question. I think right now OPEC is, I think they're being driven a lot by this fear that of what happened in 2018, which was they listened, they increased, and then the price fell. I think I'm sure that they are looking very closely at U.S. rig count and all of that, and I'm sure they're talking to their buddies. I mean, come on, they have like dinner with these people
Sure.
you know but so I'm sure that they have a good sense of that. I wonder though if they're looking at like, okay, so how many rigs do you need to grow by, like, say you're adding, I think 10 rigs a week is a bit optimistic just in terms of like all supply chain and labor constraints.
Mhm,
Say we're adding 5 rigs a week, how quickly and does that translate into barrels of production, and how much?
mhm.
You know what I mean? Like if we're adding 5, I mean, that's like I feel like that's a complicated like calculus problem to which I cannot figure out, but I can like kind of see it in my mind. It's like, okay, so if you say each rig averages this amount
Mhm,
of barrels and you can bring them online in this amount of time, then say you're doing 5 rigs a week, but you still got like transportation, you've got all this other stuff, and then when are those barrels actually hitting the market? And then there's a difference between, okay, so those barrels may get to the US are going to get to the US market a lot faster than they have potential to get to the foreign market, though producers may decide to export simply because they get more money for it. It could be a better deal for them. So, it's not exactly clear, but I just wonder like how long is that going to take to translate into, like, what if it's, like, next May? By May, they're basically, like, supposed to be done with their by May, OPEC's gonna have a lot more production on the market.
mhm.
They may have that may have stemmed the tide by then. I don't know when
Right,
when did the curves intersect?
right, right, and, if I follow what you're saying, which is, if we're not careful, we can go to a spot to where the US increases, and then OPEC doesn't respond, and then we're price
Yeah.
back to 50 or 40 or wherever it go. Okay,
Yes.
a couple comments here. So, energy blogger, Japanese PM to request OPEC to increase production to stem prices. Um, I guess that's a comment, not a question, or is
I
it?
just
I
don't
don't know.
think, I mean, I don't think that will have much more of an impact on OPEC. I mean, than Joe Biden asking the OPEC to do that. I mean, maybe because, like, Aramco sells a lot of oil to the Japanese, they may they sell more oil to Japanese than they sell to America, so they may be more inclined, but I just don't see, um I don't see someone says, "We look great."
Thanks, dude. I think that's
That's
dude.
that's
Thanks,
because 'cause
dude.
you're wearing a jacket.
Yeah,
Yeah,
it's probably Big Orin secret account. Okay,
yeah.
another question here. What about Saudi and Russia recommending nat gas counterpart to OPEC?
So that's really interesting. I've kind of been thinking about that since Putin made that comment about, oh, we're going to start pumping more natural gas, and then the price like plummeted briefly. And oh god, I gotta look this up. I said something really great about this, and here I'm gonna read. I said, so here's the thing with Russia. Russia and Qatar would be like the big honchos in this natural gas producers group. And here's the issue with that. Um, so Russia clearly has an outsized influence on the natural gas market at the moment.
Mhm,
Um, Now, I think Putin might enjoy being the most powerful man in the European energy scene right now. I'm sure he's having a ball. But I think if you asked, Saudi oil ministers like Zaki Amani or Ali Al Naimi, they would say that that power is fleeting. And because, high prices bring on investment, that brings more supply, and that dilutes any one producer group. And a lot of places already have, they have the ability to produce more than they are currently producing. So I think that would make their influence even more fleeting. Plus, as oil markets know, and natural gas markets, I think, will come to understand, Russia may or may not follow through with its commitment. Like, just because Russia is playing along with OPEC right now doesn't mean that it always will. In the past, Russia has made oil commitments and then just not done that. That's why Naimi didn't want to play ball with Russia, because he believed that Russia was fundamentally untrustworthy. So I think that any power that Putin has over the natural gas market will be even more fleeting if the market doesn't believe his word. And so that's a problem with having this. So I don't see that happening soon. Also, Saudi Arabia produces a lot of natural gas, but it does not export any of it. It has no capacity to export it. It uses all of it domestically. And I think it's a long way off from becoming a natural gas exporter. It's much more likely that Qatar would play a bigger role there. But it's a good question.
The other thing, organization of gas exporting countries. I like that.
OGEC. That's a good act.
The other thing to consider is as the Permian ramps up, the U.S. natural gas production is going to go up because it was the largest natural gas field we had, and it's really weird because that's not where where our dry gas fields are. So you'd expect the U.S. production, the way it currently is constructed, to kind of wreak havoc potentially on both sides, right? So we can have the oil part of the equation, but also have the natural gas part of the equation where we're wreaking havoc with that because we could drive prices back down or keep them from climbing, however it works out because of
Wouldn't
our
it be so wouldn't it be so interesting if right at like the height of, everyone's like freaking out about the price of natural gas and the price of electricity and heat this winter? Wouldn't it be hilarious if, like, because of the high oil prices and more drilling, that we start getting hit with like a lot of natural gas just as it's like January or February, really like February, like really cold, and then suddenly they come like tumbling down.
Oh well, it wouldn't surprise me. What about NOPEC?
NOPEC, that's like the name of something else, though.
Yeah, yeah.
It's the name of a bill in Congress that purports to do something bad against OPEC but never passes.
Okay. Uh, two things here. One, thanks for all the questions. Two, Dr. Foreman should be here any second, so feel free to fire them off when he comes on. We'll be going over the monthly statistical report with him. Real quick, we have a story about the California oil pipeline spill. I don't think we've talked about this any on the show.
Yeah.
Um, they're saying now is that a cargo ship might have been the one that hit it. Is that correct?
Apparently, I just find that so amusing. Like, let's blame container ships for everything in this
Mhm,
world that goes wrong, right?
mhm.
Like I burned dinner,
Wait,
container ship
hold on.
problem.
Okay, yeah. So I guess this is Yahoo, but they've bought the story from Axios. So I was like, wait,
Yeah.
this is an Axios story. What's going on
Yeah.
here? I kind of skimmed
Yeah.
through it. I didn't realize it. Can we talk about the fact that they're using gallons instead of barrels?
Oh god, I hate that. Oh, why would they do? I mean, I can understand gallons, like when you're talking, but like, come on, that's just difficult for the rest of us.
Well, it's okay. So let's see here.
The worst is when I see stuff in tons. Ugh, I don't like that. So they're saying that a Panama registered ship may have struck the pipeline with its anchor when it arrived at the port of Long Beach during a severe storm in January, breaking the pipe's inch thick concrete casing and dragging it more than 100 feet. Come
Yeah,
on. That sounds like a big mess up. It's
right.
not clear that it caused the spill, but it was definitely a problem.
So let's see
Yeah.
here.
I'm forever going to blame everything on the container ships from now on.
Right. No,
Just
yeah.
like everyone does. I'm at Trader Joe's. I'm like, "Do you guys have what's happened to the gluten-free pretzels?" And they're like, "Oh, they're on a container ship." I'm like, or my favorite was like I asked about animal crackers. And they're like, "They're on a container ship." And I was like, unless you're making your animal crackers in China, I don't think that excuse flies. Like, are you sending them like from California to, the East Coast on a container ship?
The
So
container
I
ship
think I think
deal.
it's become, you know, it's being used as a bit of a catch-all excuse when sometimes it doesn't make any sense.
Yeah, but when are they going to clear them ports? Because I keep seeing the pictures of all the container ships that are sitting in port, like not
They're waiting
offloading.
for Biden and Pete Buttigieg to do it themselves. They're gonna come out there and, drive the sorry.
I haven't followed the story close enough. I just see they're there and they continue to be there, and then DeSantis said, "Come on down to Florida, we'll open up our ports or whatever." And I'm just
Jacksonville has a good port.
I'm like,
Got a big
okay,
port.
it seems like it should be something relatively easy to solve, but maybe I don't know. Is it a labor issue or do you know?
I think it's like a lot. I think it's definitely a labor issue. I think it's who knows? It's definitely not a coronavirus vaccine issue. I Did you see this report? It was hilarious. I tweeted about it. It's like an ABC report, and they're like looking at it, and they have some like government bureaucrat deputy guy who's like,
Mhm.
the reason is that the economy is undergoing a transition. Like, okay, so what's the transition? Like, since when is it's undergoing a transition, and coronavirus vaccine rates need to go up to. And I was like, wow, wow. He really tried to say that. Like, there is no way that that makes any sense unless there's some sort of like reason they had to like fire all the laborers because they didn't have their coronavirus vaccines. In which
Mm.
case, wow, are they being stupid?
Well, Mark, we hope the ships get docked so your podcast numbers will go back up. So sorry to hear that.
Exactly. Podcast
Sorry to
numbers
hear
are
that.
down. Yep.
Sorry
Yep,
to hear that.
podcast numbers are down.
Everything's down.
That's why my, you know,
Your Giants are losing because of the
take
contention.
the Giants are losing. Yeah, the Giants are losing because of the supply chain issues and the backlog of container ships. It's
There we
true.
go.
They have some, really awesome like new quarterback, but he's stuck on a container ship, at the at the port of Long Beach.
Well, there he is. He's not delayed or downtrodden because of cargo ships. Dr. Dean Foreman with the API. How are you doing today, sir?
I'm doing great. And Ellen, you must be celebrating that Jacksonville got its first win of the year.
Oh, I'm actually a Giants fan. I didn't even know the Jacksonville won. But go Jacksonville. They there was one year I think they got their first win of the year against the Giants, which was particularly depressing.
Well, the Giants got their first win of the year against my Saints, so that was really depressing. So, but
Yeah.
whatever. It's neither here nor there. Okay, Dr. Foreman, it's good to have you on once again.
Glad to be here.
Starting with a stat that it won't surprise you when you hear it, but it did catch my attention. Highest gasoline prices for September since 2014. Gasoline, obviously, when it gets high, oil and gas have their spot in the news cycle, but gasoline, when it gets high, it kind of really takes the headlines, if you will, because it affects everyone. I didn't realize since 2014. That's a number there.
Absolutely is. And, we don't shy away from trying to just give an objective read on what the data are. And for oil and petroleum products, it's the highest since 2014. For natural gas, we actually have to rewind the clock to before the U.S. energy revolution and go back to 2008. It's that extreme in terms of the moves here. And it's a really interesting both domestic and global situation. And the good news is that domestic markets are relatively well supplied. If you are looking for natural gas and you're sitting in Europe or Asia right now, the markets are actually short, and they're seeing prices 5 times the domestic ones that we've got. So, watch this space. But these things, we've been saying really since late last year that demand would come back along with the economy. And over the last, really starting the first quarter, the fact that investment in drilling and supply haven't been able to keep up with that fast recovery in demand, this is the situation that we find ourselves going into winter here.
Okay, and on that, my follow-up to that is you mentioned the economy. So this will come out on Thursday if I haven't. No, it's already came out. It came out last Thursday,
It
right?
came out on Friday, actually.
Yeah, Friday. Okay. So looking at the API Distillate Economic Indicator, so I can put this on the screen. That's okay.
Please.
Okay. We kind of peaked and now we're coming back down. Can you kind of explain what's going on with that?
Well, the way to read this is it tracks roughly with the year-on-year change in industrial production on a 3-month average basis. So the fact that it's positive, even though it's peaked a little bit and come down for the last couple of months on a 3-month average basis, it's still positive. So it's signaling that industrial production and the broader economy in the U.S. should continue to grow. What's interesting, though, is that if we start to look at some of the indicators of manufacturing in the U.S., we've seen those really pull off actually in the last month or two. So we'll see which is right. But the diesel fuel, both the stocks of it, the demand for it, that says that the activity level is actually up. And it's been pretty much spot on over the last almost 3 years that we've published it. So I'm confident that it's a good indicator in this regard, and that if it's saying that we've got continued growth, it's been a leading indicator that historically has performed well here.
One of the questions I had, also with regards to the distillate economic indicator is, do you think and people have been talking about this, about the potential for high energy prices to start to weigh on economic activity, and do you see that happening, and how would that? I mean, do you see? Is there any indication of that in this economic indicator?
I would not say that there's indication of that in this at this point, though the futures prices for energy do go into, I mean, it's one of the ingredients, if you will. So it's already been factored in, but it's not signaling, as you can see, any major drop off up to this point. It is a concern, and I think there's a concern with Fed policy of how they factor in price inflation uncertainty going forward with their decisions both on the Fed funds rate and whether and how to taper, to what extent. With that being said, if the Fed were relying on energy prices rising to be the thing that brings activity levels down and helps lead to more tempered price inflation, that would not be a good outcome for consumers. That would mean less consumer welfare, people being in real terms much worse off than they are today. When our starting point now are the highest prices since 2014 for oil and 2008 for gas, though, the prospects for a potentially cold winter, the prospects for continued market tightness in oil globally over the next year if the economy remains on track, that does become a concern after a point. So the thing that we can say is that on the oil side, we've seen a relatively well-supplied global market. I mean, we've got today, $82, $83 WTI. So the prices have risen, but there's no shortage. On gas, globally, as we're talking about, there actually is a shortage right now where European and Asian utilities are desperately looking for pretty much any molecule they can get their hands on. So spot cargoes have been going for many times. On a monthly basis, we're looking at averages for this month pushing $25 per million BTU, but we've had days where it's gone up to $50 and $60 per million BTU when U.S. prices, though they've doubled since last year, are basically a tenth of that. So, $5.50 per million BTU in the U.S. for Henry Hub spot. With these things, we'll see. I think it's going to depend for gas, which is always a seasonal market, to see how that turns out. If it is an extremely cold winter, it'll be more challenging than if it's not. For oil, I think we have time to work this out, and we're seeing some drilling response in the U.S. where we're adding 7 and 10 rigs each week. That's likely, historically, if rigs are picking up, the production prospectively should follow from that with a lag. The challenge there is whether it will be enough to be in line with EIA's expectations. And remember, EIA and their short-term energy outlook has projected that between this quarter and the end of next year, that the U.S., to maintain kind of $60 to $70 oil in their view next year, you would need the U.S. to add 1.8 million barrels per day of new supply. That would take an awful lot of drilling and an awful lot of leveraging of those wells that have been drilled but not yet completed. And we'll see that, but that's the genuine policy uncertainty about how much markets could tighten next year if we don't get the kind of historic drilling response that we've seen to these recently higher prices.
Some more questions on that vein from me, actually. So, it's funny, we were actually talking earlier in the podcast about like how many rigs need to be added per week to hit a certain amount of barrels per day. And there was one article we looked at that did mention that like we're kind of going to use up our supply of ducks, or we're definitely drawing down on the supply of ducks, and could that potentially lead to a slowdown in barrels added? I think that the duck factor is certainly of relevance here.
Well, we've talked about ducks in previous podcasts, right? And I don't know if everybody completely accepts EIA's inventory estimates of still more than 5,000 ducks remaining nationwide, but it should be clear that to the extent companies did continue to drill through the downturn and keep their rigs employed last year, it might not have made sense for them to bring that production to market, and they did wait, and it was an economic decision to do that, and now they're completing them. That's just good business, I think, to have made the progress they could when they could and start to use those now. Now, whether it'll be enough and whether there'll be a trade-off, whether it's more drilling and more DUCs or whether it's either or, has yet to be exactly clear. The one thing that is showing up in the producer price inflation estimates, though, is that the input cost, the cost escalation for different segments of our industry, it's not just up, it's up in a step change from where it's been. And when that happens, it means that, from a desktop analyst perspective, we could look at estimates of break-even prices across every major oil and gas basin in the US and say, well, sure looks like you should be able to make money all day drilling anywhere for oil or gas in the US on average. But the next cost level for that next increment of production could be a step change different than what it has been in the recent history, just based on the fact that we're having to deal with these supply chain issues. We still have steel tariffs in place that have raised the cost substantially of pipeline and specialized fabricated metal components or steel components. We've got workforce shortages. We've got trucker shortages. So many of the broader economic challenges that are affecting a lot of other industries are still continuing to affect ours as well.
Dr. Foreman, we got a question from a viewer, if you don't mind taking one of those.
Absolutely. So let me look at this.
Here it is. Here it says, there was an article from Bloomberg saying we need $500 billion of capital now just to replace the normal decline curve. How can we gear up anytime soon? Would it make sense that this recovery would take years? Now, we know you guys don't make forward-looking predictions, but just generally speaking, we talk about decline curve rates, the capital, some of the economic factors you're mentioning there. Is this reasonable to look forward in the next year or so?
I think it's going to take time to catch up, and some of the proverbial damage is done, and that it really is hard to catch up once you've delayed and canceled projects. We at API, we track our investment two ways: as a flow each quarter across the entire industry, and then for capital projects in the US that are under construction. So let me comment on the flow first, because the second quarter is the last quarter for which we've got complete financial reporting. We only saw about $37 billion worth of industry investment. And these are global companies and US companies that are publicly listed in the United States. That number of 37 billion compares to like 68 billion at the same point in 2019. And by the way, it's like about half the weakest point of the great financial crisis once we adjust for price inflation. So we've never seen lower investment than we did in the second quarter industry-wide. That's point one. And that's the after effects financially and otherwise from the COVID recession that we've seen. On the capital projects, they're down over $110 billion year on year as of the third quarter. So we still have $170, $180 billion worth of projects that are under construction. This includes pipelines, LNG export facilities, storage and processing and terminals, refinery and petrochemical expansions, all of those things. $180 billion is still a lot, but when you're down $110 billion year on year, you can see that it's not out of the realm of possibility that this Bloomberg estimate, by the time you add resource development and the upstream to it, that you could be in that quantum, that range in terms of the amount of investment that's needed. And it really is hard, both from a depth of capital standpoint, to come up with it. And now when you pile on the policy uncertainties, where the Biden administration came out a few weeks ago saying they'd like to get half of US electricity from solar alone by year 2030. Well, what are the odds that you're going to queue up a multi-billion-dollar natural gas drilling program in Pennsylvania if you see that? So it's one more headwind. You need gas this winter. You need gas for the foreseeable future so that consumers can afford to get to an energy transition. But you got to see it to believe it. And getting policy that's aligned with making that an affordable transition that people can actually do has been a challenge so far. So yeah, I concur with the lack of investment is a concern. It's not easy to catch up. I hope, and I think it's important, especially on the natural gas side, to say that we've got the deepest, most liquid natural gas markets in the world. They tend to be resilient and reliable. So outside of places that are extremely pipeline limited, I wouldn't foresee shortages in the United States, anything like what is being seen like in Europe or Asia right now. But it's an issue. If we want more and we want to cushion US consumers from price volatility, we need more supply. And the best way to do that, the most assured way of the last 5 and 10 years. We've seen it when we have abundant, cost-effective supply domestically that tends to reduce price volatility and prices,
Sorry, on that
or
vein
has tended historically.
about natural gas, is there the U.S. is in a relatively, compared to Europe and Asia, good situation in terms of natural gas. Are there risks that we will see cargoes exported of LNG exported to Europe and Asia simply because of the amount of money they can make? And could that are we at the point, or could we get to the point where we see enough of that happening that it will start to affect U.S. pricing and availability, or is it not really that globally intertwined?
Well, it's a really insightful question, Ellen, because on one hand, we like to say that being able to export both crude oil and natural gas has incentivized and motivated new production, incremental production. We produce a lot more light oil in the US than the US refiners could ever use, and that's adding a lot of economic value and jobs and everything else, infrastructure and investment as a result of it. Natural gas, we've been a net exporter of natural gas for many years now, and that's continued to grow as we're adding more LNG export terminals here. And if we were just adding up what has changed year on year, supply and demand, they've changed a little bit. The exports have gone up a lot, and they've gone up because there's a pull, especially in Europe right now, a real shortage where it's a combination of Russian gas inventories being critically low and renewables having underperformed their nameplate capacity by a lot. In fact, there was an article this morning about a UK train operator having to set aside its electric trains and run diesel ones simply for this reason. And when you start seeing electricity prices quadruple because of these issues, this is, again, the affordability issue on a global scale coming into play.
Okay, and then the thing that caught my attention was, with all we said, according to you guys, we have the highest per month on record of NGL production. So we are still hitting highs in some areas for production.
Yeah, thanks for highlighting that, Ryan. When we look, let's say we were comparing inventories of propane with those for natural gas, and whether it's on a U.S. level or a state level, we get kind of similar pictures. Those propane inventories, because prices are up in general, and the NGL natural gas liquid prices tend to track well with liquid prices in general, but the inventories for those in certain states, they're at or near their highs historically if we go back to 2010. With natural gas in many states, we're seeing some of the lowest inventories. Like Illinois has the second lowest inventories on record in almost 30 years as of the last data point from EIA that we've got for those stocks, and I think that was from July. Now, there's hope that we're continuing to drill and add and bring docks, so we are seeing some catch up. But with the NGL side of it, it's an economic decision, right? You've got a flow of natural gas, and if you decide to process that gas, fractionate it, and take the NGLs out of it, it's an economic choice, and you can do that. So hence propane, the issue isn't that you've got storage of propane, it's whether you have truckers to get it locally to where it needs to go during winter, right? On the natural gas side, though, it's harder to catch up. If you haven't spooled up and put that gas, working gas, into underground storage, you just don't have it for the winter. Right now, it's low, but again, the last 5 years have been historically high, maybe compared to the last decade or so. So we'll see how it goes. But right now, the bigger issue is, again, on the affordability and the price issues. And even with a good, reliable supply, I think across income segments and households, and keep in mind that 40% of American households almost never make ends meet, right? I mean, this is going to be a really challenging time to see winter heating bills up. And EIA came out late last week with its 2021 winter fuels outlook, showing that natural gas heating bills could be up close to 50% year on year. I mean, a lot. And that shock from one year to the next, even if the 2020 jump off point was extraordinarily low, with low prices, it ends up just being do you have the means and the cash flow as a household to make ends meet? So it is a concern. And again, we come back to what can you do to support having the supply so that things are affordable for consumers at the end of the day.
Okay, one more quick question, and we'll get you out of here with this. With Europe facing gas issues with Russia supply, did the U.S. miss the trick of stepping up and showing as a reliable partner via LNG supply? Is it too late for us to save Russia? Not Russia, the Europeans. Russians are already gone.
That's a fantastic question. I think the U.S. has stepped up to the extent it can. I mean, we've pretty much maximize the output of liquefied natural gas exports, 10 and a half, 11 billion cubic feet per day. As much as we physically can put out, those terminals have been supplying global markets. On top of that, we've got another north of 6 billion cubic feet per day that goes through an expanded pipeline system down to Mexico. So look, we are being excellent global citizens as an industry and continuing to help improve the interconnectedness of regional gas prices in the process. The question I had actually that was related to this is whether Russia would be a good citizen and step up and supply more to Europe, especially with the starting up of the Nord Stream 2 pipeline. But they signaled just this morning, actually, that they have no intent of increasing supply. And I think it's because they can't, given the investment status. And this is where people really need to take to heart what an energy transition means and what the real consequences have been for investment of having gone through this 2020 COVID-19 recession. Whether we're talking petroleum producers in West Africa, OPEC as a whole, maybe excluding Saudi and UAE, but OPEC as a whole, as well as Russia, there's been a dearth of investment. People haven't had the cash flow to be able to make that happen. And it really is hard to catch up on that basis. So I think the US is doing all it can. And the question is whether, as prices have risen now for gas to the highest point since 2008, you'll get a political backlash where on one hand you have industrial consumers saying, hey, those exports are raising my prices. I want to cap them. You have a proposal now from the Southwest Power Pool to the state of Oklahoma and others saying that they would like to cap natural gas prices. Well, if you cap prices, you don't get supply. So you see how this plays out, right? You're getting knee-jerk reactions on the policy side to very short-term conditions for prices when you really need a longer-term cogent policy to make sure that you've got the supply in the first place.
I'm disappointed in you, Dr. Fortman. I've never heard politicians be accused of making knee-jerk reactions. That's the first time I've ever heard such a thing. How dare you, sir? How dare you? Okay, it was good to speak with you again. Anything that we missed that you want to hit on real quick before we get you out of here?
Well, we didn't go back to demand, but it's very quietly a 20.6 million barrels per day of U.S. petroleum demand for the month. I mean, this is strong, and it was actually a record high for the month of September by API estimates. So that tells us that as the economy has come back, the demand, you can't wish it away. It's there. And this is real affordability issues for households to be able to continue to have the fuels that they need for personal transportation, for commuting, if we're all going back to work and offices and not working from home come next year. Let's hope that's the vision, right? And the other part that's embedded in that is the importance of materials. So not all of this is burnable for carbon emissions. Normally, these other oils that go into refining and petrochemicals are like a quarter of U.S. petroleum demand. And this, starting late last year, we've seen it be between 27 and 30%. So the materials side of this, as COVID has continued, whether it's shipping, sterile packaging, medical plastics, a lot of those things have remained really critical.
I had one really quick question that I wanted to ask. I'm looking at the refined products export chart, and it was way down. You said the lowest for any month since May of 2020. And I'm curious if that could actually just be traced to effects from Hurricane Ida in September that just put a damper on exports because of refinery issues and ports and the like.
No question, the seasonal storms have affected some of the data. I wouldn't hang the hat, but the general trend of what's been happening on petroleum trade is that we've reverted for 6 of the last 7 months now to being a petroleum net importer. So that's the broader trend. Some of the numbers, like the week before last by EIA's estimates, it was 2.6 million barrels per day of net imports, or then it was back down to slight net imports this last week. So these numbers have fluctuated, and both the path of Hurricane Ida and then the recovery from it, keeping some oil production offline in the Gulf Coast, affecting shipping. It has had a trade impact. There's no question about it. But the broader trend over 6 and 7 months now is that we're a net importer.
Okay, Dr. Foreman, API.org is where we can get this report. At the top right, it says Chief Economist. You'll have that and other products. I look forward to having you on again next month. As always, enjoyed the discussion, sir.
Love talking with you both and look forward to it. Thank you.
Thank you.
Take care.
Okay, Dr. Wald, we have a few more comments here before we get out. Let's take these real quick.
Exciting.
See here, Ryan, as a presidential candidate, are you saying that your platform will not have any knee-jerk reactions? My presidential candidacy is a knee-jerk reaction, but besides that, there is no other one. So me running is a knee-jerk reaction, but that's the only one. That's the only one. Let's see here. Speculation theories. How likely Saudis will come up with an offer? We will add 1 million barrels to market, like a surprise million barrel cut earlier this year. Any thoughts on that, Dr. Wald?
I think it's not likely, but then again, you never know. They love
That's
to
why it's
come up
called a
with surprises. They love to come up with
Right?
surprises that
Right.
then claim they're the white knight coming in to save the market. So you can
Okay.
never count that out.
Thank you, Mark. Appreciate that. Let's see here. Reason. Oh, this is the follow up to that last question. Reason for asking the Saudi question is that 5 OPEC members are struggling to meet their actual production quotas. That's a good point there.
That is a good point. Another piece to look at though is the UAE because they have wanted to increase, for a while. So I don't think it's just Saudi in this case that could be part of maybe a group that has agreed to graciously increase production because they have the spare capacity, whereas other OPEC members do not. So maybe we might see it framed in that way.
Yeah, and one other thought on Dr. Foreman's comments about the lack of investment. I've never really been concerned about that in prior years because the big majors were so dedicated to oil and gas production that I always felt like they would just put the money there to make up for time. That's kind of shifted now, right? So I'm not sure the majors are as devoted. So I do think we could be in a different spot to where you
Yeah.
could see some problems. With that being said, large portions of Africa that have reserves are like chomping at the bits, wanting to get their production going. So I'm sure something will come on the line there. Thank you everyone for tuning in. Energy Blogger, Mark LaCour, Stu. Be sure to check them out. Dr. Wald, where will you be this week?
This week, well, I just want to make a plug. On Friday, I had a piece published on The Hill, which looks at what we can do to avert some really high utility bills this coming winter. So check that out. And I will be on investing.com later this week.
Okay, so last week on Inside the War Room, I had the podcast with a gentleman who went 30-something minutes without oxygen. So go check that out. This week, changing up pace, I have Benjamin Friedman from Harvard talking about the rise of capitalism and how it's tied to religion. So be sure to check that out.
That sounds so cool.
Yeah, we had a good discussion. And so, anyways, as for us, we'll be back here next week. Thank you for tuning in. Again, the show is live, as you heard from the comments. 1 o'clock Central Time, 2 o'clock Eastern. You can find that at Ellen's Twitter or my Twitter or LinkedIn or wherever. We will let you know, and we'll talk to you next week.